The backdrop of this, Ian Shepherdson, is a global slowdown. We were talking with David Folkerts-Landau about the negative interest rates in Europe and all. What are the ramifications of all that upon the United States economy?
Well, we're suffering from the same root cause slowdown that Europe is, which is the downshift in China's cycle, especially manufacturing, magnified by the trade war.
So we're not 4%, we're not 3%. Where does Pantheon have us now?
We're probably growing right now at 1 to 2%, but it will get better because I think the first quarter is something of a perfect storm, a few things coming together. The consumers adjusting from that crazy pace last year when we had the tax cuts and the big drop in gas prices. So the sort of near 4% consumption, not sustainable. But the manufacturing hit is a real thing. I think it probably gets worse before it gets better. But I don't think it's going to push the Fed into easing, which some people in markets are talking about after last week's even more dovish Fed statement and press conference. But certainly there are some real pressures, and I don't want to minimize what's happening right now. It's a real thing, but I do think we'll get through it. And I'm kind of concerned that markets are being myopic and focusing very much on this short-term data flow and ignoring the bigger picture, which is that China's easing aggressively. Very aggressively, and I think they're going to generate a turnaround by the middle of the year. And I think the US consumer's in pretty good shape. So I think the Fed maybe needs to hold its nerve a bit harder, and maybe at the middle of the year we might be having something of a rethink when we see that actually the sky hasn't fallen in completely and that the cycle still has some life in it.
David, do you worry about deflation in China?
No, not really. The Chinese have adequate tools to handle that, and I don't think that's an issue, particularly with the exchange rate and everything. No, I do not.
So do you worry about anything, or do you actually assume that they have smart politicians, they have tools at their disposal, that they will manage this economy?
Oh yeah, I worry about Chinese influence around the world. Absolutely. It's 40% of the world's GDP by 2022, and half the world's population, with lots and lots of money and capital to go around. You just saw this. You buy yourself a few more Airbuses, and you have the French and the Germans and Brussels come and roll out the red carpet for you. So there's a lot of influence that they can acquire with that, and they're using it very skillfully. Well, it's a dangerous game.
The drama here is extraordinary, Ian. I find, Ian, that the Mueller investigation clears and we move on. I mean, there's a big debate and it's an uproar, but we move on. Are we going to have the same outcome with U.S. China trade relations, which there's some kind of event that occurs and then we move on, and that's optimistic that we don't see right now?
Yeah, that's my base case, is that we get a deal which doesn't fix the deficit. I mean, there's no world.
We just move on.
Yeah, there's no world in which the U.S.-China trade deficit disappears. But what we do is we deal with some of the most egregious abuses, of Chinese IP theft and forced tech transfer and regulation, all the rest of it. We can't deal with it because it's just not fixable, but it doesn't matter.
Let's go to David Folkerts-Landau on this. What are the flows, David, that you observe in and out of China in terms of investment and in terms of the capital markets?
Just to comment on what Ian just said, I very much agree with that. I think that as far as the U.S. is concerned, this is a temporary bump, and the U.S. will do just fine for the rest of the year. I think you shouldn't underestimate the positive impact that Trump's exoneration has. If you're an equity investor, and the conversations that we had over the last couple of days, is that the U.S. looks a lot better now. A very, very important risk has been removed. The risk of an impeachment with all that entails, all of a sudden is completely clear sailing. The rest of the legal stuff is just small fry. So for now, the U.S. to us looks a lot better than it did before, and we're back to between 2.5–3% growth for 2019. And the same with the Fed. I agree with Ian in the sense that I don't see the Fed cutting at all. I mean, that's just totally the wrong direction.
So Ian, how would you look at the inverted yield curve?
Oh, it's a brief anomaly, shall we say. I think markets, the Fed gave markets an inch and markets took their usual yard and ran with it. And now I think we'll have a period of reflection. Maybe by the summer we'll realize that this is not really the right move. And I don't look at it as being an infallible recession signal. The world is a lot more complicated than that. There's a bunch of things going on, but there's not a US recession, that's for sure.